Okay, hi. Excuse the way I look. I have been saying that I was going to do this video for you guys for some time now, so I want to go ahead and get this to you. I'm not giving out any advice. I'm not giving out any stock picks. I'm not giving out anything other than just telling y'all what it is that I do to lower my risk and maximize my reward. It still is important to have a plan and do your due diligence before ever, obviously before ever investing. But for the most part, this works really, really, really well. And it does take patience, but everything does. And, I'm not going to waste your time with going into like whatever. But if you have any questions, please feel free to ask. If you guys think that you want to do like a live video type thing on YouTube or Facebook or something like that, we can do that, because people asking questions is always a lot easier than having to remember everything that I wanted to go over. Again, these are just my personal strategies that I use. And again, this is also a strategy I use to essentially be able to like just invest it, walk away, and then I can set a limit, sell, or whatever. But point being is it minimizes your risk extravagantly. So first off, let me find, okay, over here. Now I'm going to show you guys just a couple of things. This is probably going to leave you guys asking even more questions or wondering or whatever. But again, like I said, I just really, really don't want to leave you guys hanging. So I want to get something out to you. Okay. So recently, and, obviously, and I'm going to try not to get off track here, but obviously different times of the year, you have to pay attention to what's going on in the world around you. Elections, holidays, economy, stimulus checks, all these different events that you should be looking at to decide whether or not it's a good day to trade, whether or not whatever industry is going to be the best industry to trade in, whatever information you need for that day, at least, you should be looking at. My personal favorites are, there's a stocks app on iPhone. There's also, and it gives me lots of news that I prefer to look at. I don't necessarily always want to look at the stocks. I want to see what's going on in the world. Then there's also Yahoo Finance, which I also really, really like. So either one of those are great for me when I'm looking to see what's going on. Another thing that I really like for educational purposes, if you ever have a question or wondering about things, Investopedia and Daily FX. So Investopedia, like Wikipedia, only invest. And then that one I just said, Daily FX, which is, FX is, it's, I can't think of the name right now, but essentially it has to do with like trading. It's just an acronym or whatever. So those sites are great. You will love them. I'm telling you, I love them. Okay, so let me show you what I do here. I'm going to show you a couple previous things. I've been also noticing now, normally a investment manager per se in their portfolio will have a maximum or at or about 15 stocks or tickers that they're looking at to invest in. Usually you don't want more than that because you can't keep track of them. And you don't want less than that because you don't want to put your money all in one basket either. Now, it's like, okay, I missed the run. I don't know what it's going to run and blah, blah, blah. And there's also ways to figure out, or at least get a bit of a hint if a stock is actually going to be going in opposite direction. I consistently notice a lot of times that a stock will be moving in a downtrend, or it'll be moving flat right before it just explodes. Another thing I've noticed that sometimes they'll have a couple up days, very small up days, right before it really goes up. And what I would chop that up to is probably that there are actual investment management, institutional buyers, things like that, who are looking and who have access to information that we don't get until after they get it. And after it's, anyways, it sucks. But You know, that's why they get paid the big bucks, I guess, right? So, also another thing I've been seeing is don't trade based on politics. I mean, or invest. Trading is totally different than investing, which I think some of my other videos have said that. But okay, so easiest thing ever. Also, I want to add that Robinhood and Webull, if these two mixed, they would be like the most like perfect for a beginner investor. I have found what I really like about Robinhood is not necessarily how it trades or the hours or anything like that. It's actually the little list that they have in each of their stock tabs or whatever, that it'll have people who also invested in that stock, invested in these other companies. Those are great. I use those to find information. Excuse me, sorry. I use them to find information though, on stocks that I might be looking for. I can do another video for you guys to show you how I take these videos from these analysts or other investment portfolio managers, things like that, and I find out what stocks they're actually talking about using just the few details that they provide. Now, you can always pay for the subscriptions, but I mean, my goodness gracious, how do you know they even work, first off? And then secondly, they're so expensive. So if you can, you know, spend a couple hours of your day, you know, researching, then why not do that instead of spending money on something that you don't know is going to work or not? Now, the easiest thing I've found is to do that I've been following myself. And for me, I'm trying to pull back on the amount of stocks I've invested in, but I have noticed as how ETFs work, if you're familiar with those, where they have multiple stocks and one that essentially bases off, that's how what makes it nice is it lowers the risk of your investment, because you're not just putting all you're not just relying on one company. You have multiple companies across the board that are going to be having a part in what this ETF is going to be doing. So that's really, really nice. ETFs are great, like TQQ, 3 Qs. And then there's like so many more. ARK, ARK, I think that's the one anyways, is a really, it's a renowned ETF, very renowned. All of these are on the up and ups. I can gladly give you guys a list of companies. In fact, let's just go ahead and do that. I'm going to give you guys a list of 5 to 10 companies that are on an uptrend, a very steady, hard uptrend. And what I want to tell you guys about how I would invest in these is I would invest in them. I would find a particular low price that I'm looking for, and I'll show you how I find that. And you're gonna laugh when I do show you. And then I wait for it to get close to that before I start. And sometimes though, I'm just smidgen lower than where it goes to. I mean, just a couple cents off. So, you know, when it starts getting close to your buy to entry point, you want to make sure you do keep closer watch on it, or maybe even raise up your limit buy a little bit. Just do 1 share or something so it's kind of like setting a reminder kind of a thing. So you set, you know, 1 share at 175, but you're expected at 143 or something. So, you know, you're getting close. So, or 160 to remind you, oh, I'm getting closer to the 143 buy to open price per share that I wanted. Okay. I hope that wasn't confusing. I feel like it was though. Okay. So let me show you here. I'm going to go to my up and ups. I have different stocks. I have like an up and up, where all this stock's doing is going up. I have, up volatiles where it's kind of high ranges up and down. So, you know, it's not as steady of an up. It goes up and then it drops pretty drastically, and then it goes right back up more than where it was before. Those are great for me. I like them because I find the low average, I jump in on that low, and then I ride it to the high average and sell. And again, keeping track of the news and watching how it's trading and stuff like that to see if I can tell if something big's in the works. You can usually tell something big is coming if you're able to watch the stock and how it trades. And again, like, this is why I would like to do a live video, because so many questions come up and arise. And, you know, you know, I just want everybody to make lots of money, and I just want us to win, you know, that's all. So just, I'm not trying to, but I want to spread, you know, on the things that I do, or what I would do in a situation. If you have a question, you know, any of that. So, but I'm not here to give advice, just tell you what I do. Okay, so, oh, also I've got a couple referral stocks, if you would like, that I just came across pretty recently within the last week, that are supposedly set to just be some big gainers. But we'll do that at the end. Okay, so let's look here. I'm going to give you guys, like I said, 5 to 10 stocks that are on the up and up. So you have the tickers and you can invest in them if you would like. They're likely not ones that I'm invested in. I just watch a ton of stocks. Okay, let's see here. Okay, so let's go on the up. Let's see. Okay, so I'm going to try to stick to some smaller priced ones. Let's see. What am I looking at here? Okay, so this is kind of a good, this is actually kind of a really good one. Okay, so this stock right here is very volatile over the last 5 years, except over the last year, it's had really only one good volatile moment. Though you can still ride the ups and downs, it just may not be as worth it. We'll see. Anyways, but the stock's only trading at 340 right now, and that's tits. Okay, so we've got Rigel Pharmaceuticals. It's RIGL, and that's this one right here. Okay, so as you can see, unfortunately, you're gonna have to look at it backwards. So we're actually going this way, up this way, not down that way. Okay. So as you can see, we've got a real high point here, right? And unless we've got some news or some reason for why it would stay up there, why would we hold it? We wouldn't. We would take, or I would take at least, my profits, and then I would rebuy in on the low. Yeah, you know what? When you sell it, maybe it's going to go up a couple more cents, or this is my experiences, you know, but the thing is, you're never going to catch the absolute top, and you're never going to catch the absolute bottom. So you just have to not be too greedy about these things, and you have to have your patience. Patience prospers. Oh gosh darn, does it prosper. Okay, so for instance, this is more of an up and up stock. This one doesn't have ranges like I would prefer it to. But either way, you can see, so here we are on a down, right? So it's at 227, and then it jumps to a high of 260 plus before it goes back down to 240s. Okay, so that's 20 cents. That can make a difference, a big dang difference, depending on what your share amount is in this, especially. So what I would do, and this is the laughable part here, and you're gonna need Robinhood app to do this, because the ones from Webull are just too much. There's too much information that I don't need, so just go away. Okay, so this is the funny part, kids. Right here, I literally take a pen and I take a 1 year look back. Oh shoot, sorry guys. And I take my pen, and now another thing, let me mention, remember how I said something about how you've got like the economy and all that kind of stuff to worry about, or think about, at least what's going on. Is oil up? Is whatever, you know, is tech in? Is traveling? Is gold going up? Is Bitcoin? Whatever, you know, it's so much information out there. But right here is where I like to down it at. Okay, don't want too much information here. So the reason I mentioned the economic things is because around November, you've got institutions that are going to move their funds usually from an underperforming stock to a better outperforming stock. Okay, so from November to December or even January, I don't use any info from there and there. So I'll look for October 1st and I'll go from there. So right here, let me find October. And this is how I'm going to find my low average to buy in at. As stupid as this sounds, I'm going to tell you right now, it has worked 100% for me. So laugh all you want, but if it works, it works, right? So sorry, news things. Okay, so what I do is I take my pen or just anything straight that I can get a straight line off of, and I set it up at the lows. So right here. So this is going to be my marker point right here. Sorry about that. So my marker point here is my start. And I'm going to make sure I'm not touching on any November starting lows. I'm only going to go from this low point to wherever up here. And I'm going to give me a straight line. So it could be that I'm going to go above it. You never know. Anyways, okay, so here we are. We're at October 1st, right around there. Okay. You can see that. Okay, so there's October 1st right there. Okay, so I'm going to take that low and I'm going to use that to do my little magic trick here. Okay, so like I said, I'm going to take that low and that one. Okay, so with patience prospering, this is what it will look like. It'll literally go across the bottom, trying to go along the averages here, or along the low points, points there. Okay, so when I do this, when I literally just take the low point right here, I think October 1st was about right here. So I run my pen straight line across. Then when it gets to right here, I take it and I go straight across like this to find where that price is at, if I went straight across. And then I add a little bit on top of it because by the time it's going to get to that price again, it's going to go up a little bit. And that's why when I mentioned earlier, I've only missed it just by a couple of cents. That's why, because I don't add in the fact that it's not that price right here, right now. No. It's going to be over here. So therefore, I'm going to have to go up a little bit. Do you understand? So that's where my mess up came in on. Otherwise, literally, I cannot tell you how close on all of them. I mean, like, you're just like, oh, it's never going to, whatever. No, like, wow, I can't believe it's this easy. I honestly can't. It's like the stupidest thing in the world, but I know it's comical, whatever, but it works. So, and depending on you, there's so many good stocks out there. That's my biggest issue, is that there's so many good ones out there. There's so many to watch that I can't pick them for myself. So if any of you guys have tips on how to do that, that'd be, yeah. I mean, I try to think like, okay, which stocks are going to be like the best long-term holds, but there's so many ways to make really quick, easy money. But then again, I can tell you probably like more, I don't want to say more than anybody else, but I can tell you that I always test things. So I've tried to see like, okay, well, what would it have done if I had just held it and not done any trading? And now if you do the smart trading and you're patient, unlike many of us are, then trading may make you more money. But if you are not patient, or if you don't have a plan on where to get out at or whatever, then you may actually end up doing yourself dirty. Now, for me, I literally have had, let's see here, for myself, I have had, let's just put it this way, the majority of everything I've invested in the last week is over 100% gains. And I mean, it feels great, but it's just like, if I, You know, it'd be nice to put like all my money in that one account. You know, of course, everybody wants that, but that's greed. That's the thing. You have to get it through your head. You can't. It's, you know, yes, like you have to be. It's a marathon, not a race. I'm sorry. I'm trying to think of a way to put this out there, but that is really the honest truth. It's a marathon, not a race. So the more you make rash decisions quickly, the more likely there's going to be negative results from that. And I mean, every single time, just step back and just realize that there is other stocks out there that you can invest in right now. You can wait for this one, you know, to go down, or, you know, find the average of the week even, and, you know, and trade based off that. Like with this one right here, if I was to say, if I was going to invest in this particular stock right here, right now, I would look at the week's average and not holding it, just investing for a day and pulling out. I would look at the week's average. So I'm looking at GNPX right now, GenPrex, which looks to me like it could be a potential good stock, but right now it looks like it's on a bit of a downtrend. So this stock right here, the high low of the week was 383 and the high of the week was 413. So now since then we've got as low as 363 or 360s. Now I wouldn't invest in this right now. I would wait for it to start uptrending, because you know what? This is another thing that I've realized, that a stock downtrending could continue downtrending. So you don't know where that bottom is going to be. And yeah, you can, you know, get in at a low entry point, but I've found that doing things like that just creates more loss instead of just waiting for it to turn around, to go on an uptrend, and then investing then, because then you're not losing any money. You may not make as much, but you're not losing. And that is key right there. That's very important and very hard to stick to, because, you know, we all want to just, like, if you're making trades, like I know for myself, one just that I just always think about run to or whatever thoughts when I think about these things was iBio, where I had, I don't know, like 20,000 shares or something like that. I don't know, whatever it is, though, everybody's amount of money is going to be different for them because of the money you have to invest. And either way, it's going to be a lot to you. So for me, I invested in the stock, and within the next morning, within minutes, I made over $35,000. But did I cash out? Did I say, oh, that's enough? No, I didn't. Because this is when I was first doing it. And not only that, but I just really don't have a lot of patience anyways. So it's not good. But yeah, if I can emphasize anything, patience. Not so much patience that you end up becoming a bag holder. Just set a stop loss to get those emotions out of it. That's what I like to do. But then when that stop loss goes off, you want to make sure you're keeping track, because they can just turn right around and go right back up. And that is such a fucking bitch. But at least you didn't lose any more. And again, another situation I've had the experience with, and it is just, you know, it's like, yeah, you know, it's like, it sucks to, you know, pull out of a stock and it turns around and goes right back up. They call that whiplash, or whipsawed, I'm sorry. But, you know, it also sucks when you lose a ton. And it seems like if you don't set the stop loss, it continues going down. But if you do set the stop loss, then it like turns around and goes right back up. You know, I know they say that they're not watching us and shit like that, but I just am not sure about that. Okay, so let's go through a couple more, okay? And I want to at least give you 10 stocks that are on an up trend. Complete up and up, though. Not even like the last one that I told you about, okay? Because I know y'all out there, you know, I can't judge you guys based on anything, and I wouldn't anyways. But my dad, or not my dad, well, technically, but oh, I don't want to say his name on here anyways, okay, this guy that raised me, he is an investment broker. So I've had a little bit of a head start on, you know, understanding the wording and what means what and why we do things we do or whatever. So, you know, I just, not sure what my point was for that, but I want to help you all out. And I've got some great tickers here, and, you know, just check them out. Do your due diligence. Again, not recommendations, but these are ones that I have found are on a hard uptrend. And essentially with something like this, all I would do is look for the low average of, like, you know how it uptrends, right? It goes line, uptrend, but then it has its little high points, right? Like when it got news or something like that. So you want to make sure you don't buy in on the high points though. So it has the low average and then it has its inflated points in time. You don't want to get in on the inflated. You want to go in on the regular average. So wait till it drops. You're not going to lose anything. You're not going to lose out on an opportunity and blah, blah, blah. You know, I mean, as long as there's nothing else going on. And then you make more money too that way, and you have less risk. I mean, I can't tell you how many stocks I've been holding right now recently, especially since starting this new strategy that, God, I wish I'd done it the whole time. That literally I'm like, oh, I must be negative on this one now, but I'm just like, I am in at the bottom of these guys. I mean, unless something crazy happens, I am at the bottom. This is great. Like Oxygen, I had Oxygen at 29 cents. Isn't Oxygen? Yeah, the one with the eyes, the eye one. Yeah, 29 cents. And that thing's like past 2 now. We went over 3 at one point. I've had freaking so many of them that, and I mean, I could go over, but that's not what I want to waste time with right now. So if you're really that interested, I probably won't tell you anyways, but because it's wasting my time. But if you want it, let me know. Okay, so let's go to our up and ups. Okay, so we've got Rigel, RIGL, which is technically on and up over the last year. An entry point for this particular stock that I would wait for would be hold on one second. My entry point, if I was going to get in on this stock, would be just around the 320 area, give or take. So 320 up or down. So it's almost at its entry point. It's at 340 right now. For me, that's my what I would do. So 320 area on RIGL is at 340 right now. Again, I could not be compensating for the time, which I tend to kind of do, but I was trying to compensate on it. So no more than 330 is what I would invest in on this one. I would again watch news, see, you know, if there's anything that could make it rally up higher than that. Then we've got CX, which is CEMEX, and CEMEX, which is provides cement or whatever. This could have a lot of upcoming potential with the fact that we are, you know, we may have a lot of building reconstruction, things like that. We're talking now about industry, materials, whatever. So CEMEX, which ticker is C and X, CX. Here is, again, the year. Okay. For this one, I have an entry at 515. I am actually invested in this. I've reinvested in it time and time again. But I'm in at 515. And that, again, was, see how it has that dip right here? This dip right here. That's where I jumped in at. So, see? 513. So I jumped in on the bottom. And then now it's all the way up at 563. Okay, so see right here, these little dips or whatever. Now this is one though that is on like an up and up. So essentially, you wouldn't even use a dip on this one. You would just try to get in on the lower end, but you know, but there's not much of a dip that's going to happen on this. Because it's a very up and up kind of a thing. But I would always keep a lookout because, I mean, look at this. This is the 5-year watch right here. See, this is the year we're in, and this is the 5 years prior. So this is still, to me, very you need to be cautious on it for sure. Okay, so let's see, go on to the next one here. Wit is, see, oh, got another good one. Okay, Wit, which is Wipro, and its ticker is WIT. It's this one right here. Okay, it's currently trading at 642. And if you guys want to know what I would enter to this at, it would be, ooh, this is kind of a toughie. Oops, let's see here. Surged in October there. Okay, so we want to, whew, this thing's been just pretty much riding the average. Okay, so WIT just went up, just surged a bit. So I would take a couple weeks personally, and I'd wait for this to settle on back down, because you're not going to make anything more on a surge, right? You're only going to lose when it drops. So I would buy in this when it drops again, closer to the $6 range. So $6, give or take, you can usually figure it out when it gets closer to that time. Sometimes what I do is I'll buy like 0.01 of a share, or I'll just set a stop loss, or I'll write down on a paper and I'll make myself like, you know, a list of the stocks that I have and what entry I'm looking for, plus or minus, you know, so near that entry. As long as it's near that entry, give or take a little bit, that's fine, because when it rallies, it's going to go, whoo, and then even if it doesn't, it's still going to go up because it's on an uptrend. Okay, so then we've got, let's see here, what's another good one? So GSP is also one that looks to be, but I'm going to tell you though, the volume on this though is a little bit concerning. We're talking about very, very low volume. I would not invest on this at the moment. I might watch it to see what's going to happen with it when it starts becoming more popular, because you have to make sure that whatever you put in, you're able to get out. You don't want to get stuck in a stock. You're trying to make money here. So that's that one there. We're going up this way. You're at 1158 currently. And again, this is ticker GSP. And if I was to invest in on GSP, I would be investing in at, right here. All right, so essentially about where it's at right now. About 1143, it's at 1158 right now. So about 1143 at the most is what I would put in on this one, because I'm pretty sure it's going to hit that. If you look at the week, in fact, if you look at the week, it's gone down as far as 1139 here. So, okay, so there, that's that one. That's GSP. Now we've got, let's see here. Oh, that one's not supported. Let's get that one there. Okay, let me see if I got some like ones in here that I know that people like. Let's see. Actually, these ones coming up are pretty good. Okay, so we've got Mattel, which is ticker MAT. And again, look at that beautiful uptrend. Just make sure you are patient, as I mean, I would make sure I was patient and get in at a low point. But there's not too much of a low point when you got a trend like these. I mean, these are just some hard ups, you know what I mean? Not hard up, but like it's a hard up. Okie doke. So if I was going to buy in on this one on a non-inflated price, I would find the non-inflated price to be about, by the time this drops again, would be to the price. Ah, come on, you little silly. Okay, would be, okay, so let's do this one more time. You know, really, I would just love to get questions asked like, hey, I want to invest in this ticker. What price would you invest in it at? And I'd be like, oh, this right here. That's what I would buy it at right here. And then, you know, whatever. But, you know, so I'm just trying to work with what I have here. So let's see. Okay, so again, let's see that one, the dip there. Oh gosh. Yeah, so this one in my books, I feel is kind of inflated for what it is. But if I was going to invest in it, I wouldn't pay more than, you know, $17.50, give or take. And it's at $18.42 right now. This week it's been as low as 746. So surprise, surprise, it works out. It seems like there's that on Robinhood, the details in this their graphs or whatever are not nearly as detailed as say like Weebles. Real quick, I just want to throw out there, I'm sure you guys you're fine with where you are, but you may not know that there's something called a DAT broker, which is DAT, and a DAT broker is a direct access trade, which means that you do not have any middlemen to go through. It means that you directly access your trade and it gets pushed. So if you're a trader and you need, quick moves that, I have found that international broker or something broker, IB, and then IBRK is another one. I think that, it's the same thing, but it's just an extended of the name. And Thinkorswim. Thinkorswim looks to be better. So I'm going to go to Thinkorswim actually. I've been talking about this for a little bit now, and I definitely am going to probably be moving over there, but either way, so we got Mattel. So yeah, again, excuse me, 1750 area, give or take a little. And had you invested in the week earlier at 1750, you would have made only 5.5% off of this one in the week. That's it, which isn't bad. It's actually really good, especially because you have to think, another thing I've noticed, which I don't know. Anyways, when you have your money invested and say, you're in a penny stock, the only difference or why people like penny stocks versus like bigger stocks or whatever, more pricier ones, is because the percentage goes up quicker most of the time. Sometimes not always, of course, but otherwise having the same. So like when, for instance, there's been a couple different tickers I've seen go through reverse splits, and the reverse splits are not always bad things. They're not always bad things. In fact, they can mean better things for the company. Sadly, though, of course, the way people feel about these things and react to them is going to result in something either great or really, really catastrophic. And usually in this instance, it's catastrophic. So, but I just want you to understand that if you had your funds in a reverse split and they, even if it was a 1 for 25 or whatever, you still have the same amount of money in there. So whatever percentage you make off of that, it's going to be that. But either way, of course, if you can avoid it, great. But if it's going to benefit in the long run, then I wouldn't fight it. And if the stock's already on an uptrend, it's not going to make a damn bit of difference other than the way people get emotionally about it. So that's my thoughts on it anyways, personally, which I've gotten from things that I've read. That's why I feel that way. So anyways, okay. So that one, I want to find you guys a better stock. Personally, if I was going to invest in any of these, it would be the CX one. The CX one I like. I know that it can be risky, but it seems to be, it's a lower price stock, so it's going to have a bigger percentage run than the higher ones, more or less. Sometimes, not always. Okay. I'd rather prefer give you guys good ones. Not worrying about these other ones right now. So let me find, okay, Info Systems. This one's a good industry right now, or for right now also. We're looking at Info Systems, which is way above its fair value. So keep that in mind. And this is a company, Info Systems Ltd. is a digital service and consulting company which engages in the provision of end-to-end business solutions. It operates through the following segments: financial services, retail, communication, energy, utilities, resources, and services, manufacturing, high-tech, life sciences, and all other. The company was founded by Dinesh, blah, blah, blah. Doesn't matter. Anyways, so what's great about this is it's got a wide net of things to catch, kind of like an ETF would. You throw out, you got a large net, you're going to catch more fish, right? Okay, so this one is again on a big up and up. So I'll show that to you again. With that, if I was going to enter this one, I would be entering it. Oh, I think I already went over this one, right? Huh? So if I can get in this one, it's going to be, like I said, around 750. 750 on INFY, Info Systems. Okay, so let's go to the next one here because I got things to do. Okay, Gap. Gap isn't bad. I've noticed this is a pretty slow moving stock though. The most recent low was at 1922. It's currently at 22.39. I would definitely do my best to get in on a low average on this one because otherwise it's going to be real slow money. But you do have, see, here we got ourselves a little dip, or that happened, the dip that happened right here. Okay, and I bet you anything that's going to match up to what I'm going to tell you right now. So hold on one second. Okay, so there's October. Okay, so yes, that's a beautiful dip. That's the dip we want right there. The high before it was 26.87, or yeah, 26.87, which is probably higher than that. But that's what it registers here as. So that was on November 25th, around there. And it's dipped down to 1922. So essentially right now, let's see, at the beginning of the week, it was as low as the 19 range. So I would try to get in around 19 to 20 something at this point. Because it'll probably likely continue up from here, at least for a while. And then also looking for the fair value is $21. And also keeping track of earnings dates is big. So you can find some good catalysts to give you a little extra boost. And taking profit is not an issue. You can always take profit and rebuy back in at the lower of that same stock. So that's one way. And it's kind of like profit stacking, really. Okay, so okay, oh, car. I was in this one at $11. Car Global, which is at now $41.57. This is a newer IPO that was created by United Technologies and Raytheon, a merger between them, which created Otis, yeah, Car and RTX. So Car we have here, you can see it's been on a very nice uptrend. And if I was going to enter this one, which I personally feel is extremely inflated, so I would not enter this one, but I would not enter it either. I would just put a stop loss in for sure. So if I was to enter this one, I would do my best to get in around no more than $37 at tops. And again, I just get real nervous with these stocks that are like this. They're just too uptrending. And but at the same time, then again, a lot of times I am, with the way that the market's been acting, a lot of people are investing in things that just have a good advertisement. Not that the company's good or even has a good product, just that other people are telling them it has a good product. They say an analyst says this $5 stock is worth $25. That stock will hit $25. It's literally emotional investing right now. It's insane, and it's been really hard to figure it out. You know, with like, I mean, I have to like tell myself, okay, what essentially sounds the best? Doesn't have to be the best. What's gonna make people go, oh, and want to buy? That is what I, at this particular time, am having to look for, because there's just too much, too much of the not kind of knowing what you're doing. And by all means, I sure hope they're making money, but I'm gonna tell you that in the long run, this is not gonna end well. For this one, again, like I said, 37 area. Okay, I would like to find one that I would invest in here for you. Okay. this one since September 24th, October. Okay, no, I don't want to do that one for you. Industry-wise, no, not that one. That's too new. Plug's another one that just keeps going up. I mean, wow. That one I will not enter. I might go ahead and enter it now, but it won't be until it reaches back down in 30 to 40 range. It's at 53.48. You know, it's like, oh, you know, you're probably like, I know people think like, oh, it's going to keep going up. It's going to keep going up. And that's totally possible. And many do that. But more than likely, it's going to probably dip a little bit. It hit a new high. Everything always settles at a new low, a new high low. Okay, Uber's another one that's been kind of a fun one that's been up and down a lot. Or no, that was Snap that I was thinking of. But either way, Uber is not a bad one either. If I was going to invest in Uber, let's see here, what are we going to say? So, it's funny. Remember I was telling you about the November thing about the better stocks that the institutions buy into? November 1st. Watch. Isn't that funny? So, you got a lot of institutional and buyers buying in around November to December, even the end of December. This one right here, I would buy in at, I would not buy Uber until it was back at around 41, 42. So mid 40s, let's say mid 40s. By the time it gets to there again, it'll be mid 40s. So Uber, ticker UBER, I would not buy in until mid 40s happens. And it is currently, the price per share is $54.59 currently. So mid 40s is where I would enter Uber at again. And let's see here. Dow. Okay, so here's one. It's called Dow, DOW is the ticker symbol. For this one, okay, so for this one here, we're pretty much right where I would buy in it at. It's currently at 58. I would buy in just a little below 55. And earlier this week it was at 54.46. So before it surged again, it was at that age. So essentially right now, about 55 or so, buying in at that right now is probably going to reach where it's at by the time it would dip again anyway. So you might as well ride it up. At least that's what I would be thinking. Oh, and let me show you the trend here too. So, and then, okay, so there's your uptrend, and October is just about, oh, I'm sorry. We want 1 week. Oh, gosh darn it. I'm sorry. Okay, so 1 year. This was about October right here. Right there. Okay, so I landed just about right in this area. Just lower than that. So, like I said, these were really up and up. So it's pretty hard to decide, you know, oh, is it going to dip? Because it doesn't dip, it's going up. So you just got to find the lower average of that uptrend and get in on that part right there. Okay, let's see here. We've also got IPO, which is an ETF. And IPO, it doesn't say, okay, offers a 10-cent dividend yield, or 0.10. Okay, so with this one here, what a beautiful uptrend. I mean, how can you not make money on these if you're just being patient, right? Just putting your money in there and watching them. This is IPO. It's Renaissance IPO ETF, and it's currently trading at 66.62. If I was to buy in on this one, I would be, I think this one's actually under where I would buy right now. If I believe so, if I believe correctly here. Oh yeah, no, it's like right at what I would buy it at right now, if not a little under. So yeah, so right where it's currently at. Lowest you might be able to get in on is about 63 or so. It was the beginning of the week. high of the week was about 67. So anywhere right now, I mean, it looks to me like it'd be a good entry point. Oh, okay. I really gotta go to the bathroom, sorry. Okay, so again, another good up and up. It's ticker symbol VRNT. Again, here it is. Okay, we're looking at 68.37. Sorry, it's backwards again. And if we're going to find ourselves the entry price, we want to find where that first was right there. Okay. Okay, so entry on this ticker for me will be around 61.49. So about 61.50 or less. So amazing. Look at that. Okay, so going off the year, I found it to be about 61.50, probably a little more. And look at this. At the beginning of the week, we're sitting at under about 65, probably a little under before that. So, I mean, that's exactly the kind of, you know, that's what I'm talking about. Like, it gets there. You just have to be patient and wait for it. And if you get close enough, then you go ahead and just buy, and then you write it up, and then sell, and then rebuy again. Staying on top of that news to make sure you don't miss a rally that you didn't know about. Okay, so here, oh, Pinterest. Hot damn, Pinterest is done damn good. Okay, so Pinterest is really rock and rolled this year. Again, we have another one, PINS, Pinterest. Again, up and up, baby. So this one right here, we're looking at a entry of okay, if I'm going to find an entry on this, it's going to be mid-60s, give or take. Mid-60s, easy. And earlier this week, it hit as low as 66.20. As low as right here. This week, it hit 66.20. So mid-60s, as I just said. And sometimes during the day, they'll hit those low 60s too. So, I mean, you never know when it's going to hit it. But you kind of have an idea, and that's why I just set the limits and let them fill. You know, sometimes I'll do it for 1 share, and then that way I can go back and I can see the price on it, and then see, am I close to it or not? Should I go ahead and turn it to like 100 shares or whatever I'd plan to buy? Another thing I do is I don't buy everything all at once unless it's going to be this kind of a trading thing. Then I'll buy like, 100, 200, 500. Just depends on how many shares, what it's cost. But I like to spread it out. Like I was saying earlier, the fish net, larger fish net catches more fish kind of thing. Because it's almost like an ETF working. So you have some that you might, if you only have a couple $100 in each one, you're not going to be making big losses on any of them, I mean, unless the whole market across tanks. So at least that's my view on it. So you got Pinterest there. That's PINS again. Intellitherapeutic. This one also a beautiful slow up. This one though, for entry, up until recently, this thing didn't move at all, really. It was very flat trading. IPO'd at 22.10, currently trading at 72.78. And if I was to enter this on an uninflated price per share, this would be much lower than where it's currently trading at. So we're looking at literally no more of an entry on this one than $35. Again, it's trading at 70 to 78. It's probably never going to see that again. It's very, very possible, because anything is. But this one right here, if I was going to find a new entry based on the ups and down volatility I'm seeing, I'm going to again say 60 range, mid to low 60s on this one, even high 50s range on this one. As you can see right here, see these big kind of very volatile moves right here. Okay, let me get you a little bit closer look. So let's see. Okay, so Yeah, so it looks like this is where our volatile range is right here. Okay, so this is actually the range that I'd be looking to buy this at, because when this dips, it's probably not going to dip back to around here, but it probably will dip to something around here. And again, this is like, I would love to be able to like show you guys a video and just how I like see where the price is going to go, and like how I can just tell these things. Or at least I'd like to try to show you guys so you can do it on your own. So we got that. Again, I wouldn't enter over $40, or I would enter in around $40, give or take. Not, but not where it's currently at. But it looks like the entry will be around the $63 range on that one, which is NTLA, Intelli Therapeutics. Okay, a couple more here. I'm not sure how many I went over so far, but again, like I said, I wanted to give you guys a couple of them, and I'll just run off a few other ones. And if you have any questions, just ask, ask me, like, what would you enter this one at? I'm not going to give you guys advice, but I will tell you what I would do. That is it. We've got 10 cent, we've got net, 10 cent is, the ticker is TCEHY, that is TCEHY. And, oh, let me just throw it out there, by the way. I don't invest in Chinese stock. So this is a Chinese stock. And in fact, we're going to go ahead and just, yeah, they may very well likely be supporting the Chinese Communist Party. So I don't like to invest in Chinese traded companies ever. So in fact, I'm not even going to give you guys any information on this. I hadn't known that it was. So I'm just going to go ahead and kill this one out. None. No Chinese gamings. I don't hate their people. I love Chinese people, but I don't like the Communist Party. That's a no-no. Okie doke. And plus their stocks are really, really weird. Anyways, the way they trade is like essentially like obvious manipulation. It's pretty obvious. And across the board, like I'm super sketchy about the way this market's gone. I mean, this is just kind of unbelievable. And I know of some things that I read earlier in the year about how the Chinese and the Russians have been buying up stocks and gold and just essentially playing off of our negative times. So, okay, let's see here. Tremble. Make sure you're not a Chinese's one. Nope. Okie doke. So again, we got another big one. Up. We're looking at this one. It's ticker TRMB. Again, TRMB. And we are looking at an entry of at or around. Okay. At or around, darlings. Okay, so next time it drops down just a little bit because it did just go up a little bit. Currently trading at 73 something. I wouldn't buy this at more than $66. $60 to $68, and it's currently trading at $73.08. So we're looking at just a small dip. If you look here, it just rallied a tiny bit. See right here? So we want in this entry right here in that range, which it'll fall back to, I'm sure, probably, likely, usually always happens. Okay. So then again, let's look at net Cloudfare. I'm going to do a couple more and then I got to go because I really got to go make pee-pee. Sorry. So Cloudfare, we're looking at Cloudfare, which is ticker symbol NET. Cloudfare. Okay, again, looking for October 1st area right there. Okay. All right, kiddos. So when this hits time again, I would assume we're probably looking at okay. So around the mid 60s again. Surprising, all these are coming out around there. But likely I would say like $66, $67 about is probably where this will drop to before it's viable again. Currently it's trading at $76.90. And it is looking like it's on a small downtrend too. On a 1 month. On a 3 month it's up, but on a 1 month it's a down. So here. So 1 month, 3 months. Okay. So we definitely want that lower one. And I bet you, anyways, I truly believe that this is probably going to hit that price that I was saying for sure before it goes back up again. So that will be an awesome entry right there. And that's an easy $10 per share increase, you know, because it'll definitely probably go up more too. Again, just what I will be doing, what I will do. Okie doke. Let's see here. DQ. You know, I'll give you a couple more tickers on the ones that are like up and up, but then I want to show you guys one that is like volatile up and up, you know, so you have good dips to get in and run up with, like where you make 20+% in a matter of days, not even, you know. Okay, so Sky, SKYY, First Cloud Computing ETF, trading at 95.91. And then we've also got TAN, which is like straight up. I mean, not straight up, but not volatile. And that one is TAN. Then we've got, okay, so here's one. Moderna. Okay, we got Moderna here. Moderna's up, but it's very volatile. So would I buy it on December 8th area at 169? Hell no. That's a new high. We don't buy on new highs. So what would I do? I would say, okay, let me find my good average here. Okay, so a good average would actually be more like around the $76, $80 range. I will never buy this until it hits that, or unless there's something that shows me that this thing will guaranteed be only going up, because no. So that's one of those ones which I like about these up and up trades that are volatile, is that they do allow you to, for me, I feel they allow me a lot less risk, and I'm already on an uptrending stock. So say I miss whatever, it's still going to uptrend, you know, so I have to wait a little bit longer, whatever. Or I can make extra money on that stock by trading the averages of ups and downs. So when it's, you know, buy on the lows and trade on the higher averages. So like this one right here, if I was to trade this one, I would be buying under 100 or near. If I was actually going to do it, I would be waiting for that, probably by the time it gets there again, $80 range. And then I would buy it, and then I would ride it up to the 150 range, and then I would sell it. And then I would do it all over again. It's, you know, I mean, feels pretty secure to me, if you ask. So you got that. Okie doke. IBUY, again, another very, very uptrending stock. Okay. I sure hope you guys are enjoying these. And then we've got ARK, ARKK. Actually, it's not ARK. I thought it was ARK. I don't know why. But it is ARK, but it's not, the ticker's not ARK. Okay, so we've got ARK here at 138.62. ARK is a beautiful ETF, and the manager is very renowned for her work as well. So I do like this ETF a lot. It's very not volatile for an up and up, but it's also has its points of volatility. So let's see here. What would we, if I was to enter this one, I would be waiting for an entry point around, okay, perfect. I will wait for an entry point near 125 area. It's currently at 138. I will wait for an entry around 125 for ARK, ARKK. Over the week, it's reached as low as 126. So literally just a week ago. So I'm sure it will probably go to that again, which is perfect. That's exactly what I want. So except, you know what, maybe that was actually going back on the, no, it's about to tip down again. So yeah, perfectly 125 area there. Okay. APTV, Aptive. We again have a beautiful up and up. So okay, there you go. And we've got, let's see here. All right, we've also got ZLab from the day of its ticker IPO at 24.25. It's currently trading at 148. IPO date was 2017, September of 2017. And currently this thing is badass. Okay, so that's the 5-year. And here is your 1 year. Okay, so this is a beautiful stock right here. With this one, I would buy in. Again, I on this one, I don't think my little average was going to work on this. But it would. It just depends on a matter of timing. Okay, so if I was going to buy this one, I would be buying this around the 123 give or take range. So, and then within the last week, oh my gosh, would you believe it? Within the last week, this thing hit. This is so funny. This thing hit as low as 127.53. So just like I said, the 120, 3 or 5 or whatever I said their range. But this stuff really works. Like using these averages, I mean, as stupid as it sounds, it really, really works. You just want to take the low points, again, like I was showing you. You want to take the low points of the stock trading times, okay? And then wherever October 1st was. I never include anymore because after finding out about what the institutions do with the stocks, I no longer include October. November. From there on out, I only include October because a lot of trading changes around them, which means that that's not a normal movement or activity for that particular trading stock or whatever. Anyway, so again, that was ZLab, ZLAB. I'm going to give you 2 more. And then I got to go. But again, please, I am so happy to answer questions about my personal strategies and what I do and any of it. So, and I'm always happy to hear what you guys have to say too. So please feel free to share as well. So this one here, so this is actually a pretty perfect one to kind of show how you can get in on the better averages. So this is MRTX, Mirati Therapeutics. And we're looking at a $209.57 entry area. Now, as you can see, it had some major inflation right in this area, right here. Otherwise, you almost have a straight line, right? Okay, so what we don't want to invest on, or what I don't want to invest on, is this area right here. I don't want to invest on their inflated price. I don't want that. And I'm patient enough where I'm going to wait. So let me find where about the averages that I should be investing in at. And we're looking at, okay, I think we're actually under where we should be. So this is perfect. Oh, no, we're just at and about. Yeah. So right now, if you're going to, if I was going to be investing in this company right now, it's essentially right where it needs to be. I'm going to look at the news sources to make sure that it's not got any reason to be going down. I'm going to look at their finances. I'm going to look at their management. I'm going to make sure that this company is everything it looks like it is. And over the 5 years, I mean, we're looking at, there's been no issues. So we got a little flat here, but that's nothing. And it's got an out of 14 analyst ratings, we have an 86% buy and a hold of 14%. So that's that. Again, these are where people also own. I find this is so helpful to me. I find so many good stocks using this. So just keep that in mind. And again, if I was to buy this, it would actually be about where it is right now. So it's been as high as the 240s, it looks like. Yeah, the 240s. And it's currently trading at 209.57. So it looks like there's, and that would be a, let's see here, 209. Okay, so, okay, perfect. So 209 to, so if you were going to, okay, sorry, 1 second here. So if I was going to buy this, let's say, that, and I was trying for what I was saying, the pricing and stuff, that would be a 18% gain from about November to December, give or take. That's a little slow for me, but we're also talking about a 15% gain on a $209 per share thing. So it's not necessarily, yeah, it all just depends on the money that you're investing into it, the amount of money. But 1% on $209 may be the same as 10% on, you know, I don't know. If actually, I'd have to rethink what I'm saying right there. So just back out. Don't think about any of that. Unless you want to, but whatever. Okay, so that was MRTX. And the next one is going to be Square, which is hugely gone up this year. But it wasn't doing bad before then really either. So this is a 5-year of Square. And I've got a lot more to talk about. I just, not right now. Again, prefer questions really. And then here is your year of Square. Okay. Now on Square, what I would do for Square, where I would enter this at would be shoot. Okay, so if we don't take into play the November thing, I would say about 212. It's at 227 right now. So between like 210 to 220 would be an entry on Square currently. Again, though, I just want to mention that everything is inflated across the board. So if you are investing, they usually set stop losses for about 15-20%. So if the market crashes, you're covered. And then it also gives it enough play room and stuff like that to go up and down, volatility. So I got a lot more out there, like a lot more tickers I can refer if you guys want them, that are like, but it's about finding your entry, about where the entry is going to be best. Is it, you know, what the price you want to enter in at. So essentially just the lower average, unless for some reason it's going to rally or going to surge, then obviously we want to get in before that happens. But every new high has a new high low. And, you know, I've never seen a high that stays as high as it got. So that's another thing. So, I mean, depending on your strategy or your expectations of your investments, how quickly you want your returns, et cetera, et cetera. But just from personal experience, patience prospers a lot because they're always going to be there. It's just a matter of getting into them at the right time and selling them at the right time that makes the real difference. So, okie doke. Well, I hope this was somewhat helpful. Have a great day and Happy New Year's, you guys. Take care.